Hey traders and investors, it's Serge Berger here. Getting a lot of questions on the energy sector again over the past week or so. Some of the more astute investors I speak with on a daily basis have voiced some of their opinions in that in terms of the energy markets as well. So I want to give you a little bit of an update of what's happening here. If you look at the USO, of course, it's just a very basic ETF measuring the price of oil. You can see we've had, of course, this big cascade lower since last summer. But what happened at some point around mid-March is that price made a final bottom, or at least what so far looks to be a decent, at least medium-term bottom or near-term bottom at the very least. But momentum, as measured by the relative strength index, made a higher low. So you have, therefore, what you have is what I call positive divergence. So momentum made a higher low, price made a lower low, and 90% of the time momentum is the true read here. So in other words, 90% of the time momentum will give you the true signal in this case, which would be higher. So that's a USO. Now let's go a little bit deeper because the single factor model stuff isn't really working anymore, and probably really has not worked before. Look at, for example, the RSX. This is the Russian ETF. Okay, the Russian ETF for the Russian equity market, and of course, that one not so coincidentally bombed out late in mid-December, I should say, and ever since has started to give us more promising signs on a relative basis. Again, you can draw in some basic trend lines, and you can see them breaking higher ever since, and that's and we're still look to have more room to the upside here. You can take this another step further and then look at single name stocks. So what I'm going to look at here is Schlumberger, SLB. Obviously, oil services stock, very well known, large market capitalization, a lot of liquidity, so there's plenty of room to get in and dabble around on a name like this. So what you see here is a stock that's actually given us relative strength versus the price of oil. So oil services stocks over the past few weeks have actually given us relative strength versus the price of oil. So there have been a leading indicator. It's something I've kind of been advocating for Steady Trader members for many months now, is that once oil is ready for a bounce, we'll probably first see it in some of the energy stocks. And that's actually exactly what looks to have taken place. We can now draw some very simple resistance lines. You can see we are actually, as of right now, just about barely sneaking past a first resistance line here in Schlumberger. So this is a very systematic and step-by-step approach of how you can take a big picture in a commodity, then you look into some commodity-affected country indices, and then, of course, single-name stocks, and maybe get the most leverage out of any potential trade setup. I do hope this makes sense, guys. If you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Otherwise, you can head on over to steadytrader.com and check out what we're doing over there.